Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals. Gold, kind of an up and down week, ended on the low side. Gold buyers thought maybe they had something going when they looked over in the equity markets and saw a 6% decline, which could have been a lot worse, and gold prices really didn't react much. We did see our second consecutive down week for gold after putting in that high a few weeks ago in late January, and market seems to be kind of unsure of itself right now. Gold used to be much of a safe haven. You used to see buyers come in when there was uncertainty, or whether it was with the Fed, or whether it was geopolitical risks rising, or the economy, or a stock market debacle, or something in the credit markets. But it really is very unreactive this week, eerily unreactive, and we did see gold prices decline, but not so much that I think it would throw in the towel. I think you've got a lot of neutrals still waiting to hit through some major break points like 1300. We never got through that, and we're right now bouncing higher, closer to 1325 as we end the week. So I think that roughly, as from a technical perspective, we are still in very much a neutral territory. We're not yet bearish. We're not yet in a bullish, but certainly there's a lot of risk still out there. And if the gold market is in some kind of wait and see mode, higher prices are more likely than lower at this point. If you look at the dollar was higher. Obviously, there's a lot of uncertainty swimming around in the FX markets. You're looking at a lot of cross-currency volatility that hasn't been around in quite some time. The dollar actually saw some strength on that, seeing I think its biggest weekly move going back to 2016. So it's been a big week, a big move for the dollar. It has adversely affected gold, but not in a way that would cause a panic sell-off. So right now, the dollar doing its thing, gold declining, but certainly not being overreactive to the stronger dollar. And then let's look at positioning. Net positioning from the specs and the hedge funds seems to be holding steady. I do believe that we're going to see that some of those longs have exited on this decline over the last 2 weeks. However, I do believe that they're still positioned for a higher movement, maybe looking to reload. If we get back down around that 1300 level, that seems to be a level. Likewise, equities are the hotbed. They're the focus. And so if equities continue to decline, then I do believe that gold will be the beneficiary of that, one of the beneficiaries to that. And I think that right now specs are waiting and kind of seeing if they can get some gold prices on sale. So right now, gold in a little bit of a down slump, not necessarily going bearish yet. Still, I think very much neutral, but looking upwards. If you have a little bit of outlook and you're watching some of the extenuating markets, the risks are on the rise. And gold is one place I think that you can be and at least be safe over the short term. So right now I'm looking at 1325, possibly getting us back up to 1350. That would be very bullish. If we get back below 1300, probably going to see some of those spec longs start throwing in the towel, and that would be very negative. So right now, in neutral territory as we head into the weekend. This is Todd Colvin coming to you from the floor of the CME Group.